Can we buy Family Bank shares? Good question. But before I answer this, Family Bank is about to list on NSE at Kenya shillings 18 bob per share. That is the latest. But the big question is here, and every investor should ask themselves this question: is this price really worth buying? Is it a bargain price or a value trap? And let us break it down in figures. Let us analyze this figure of 18 bob per share using 2025 audited books and also using their first quarter reports. And we'll be looking at some few ratios. One of them is the earning per share. If you look at the audited accounts, the ones that are on this dashboard, their earning per share is 3.93 as at December 2025. That shows very strong profitability. We look at the other figure called price earning ratio. And how do we get the price earning ratio? You get the market price, which is 18. You divide by the earning per share of 3.93, and you're going to get a figure of 4.58. What does that mean? It means it will take 4.58 or approximately 4.6 years for you to recover your investment from profits alone. And that one shows that this stock is highly undervalued compared to the other banks listed in Nairobi Security Exchange, because most of them, they range between 5.5 years to 7 years. So this one is a positive sign for this. The other ratio that I want us to discuss is book value per share, or is this share undervalued or overvalued? There we have been doing net assets over total outstanding shares, or total shareholders equity over shares outstanding. If you take that figure, the total shareholders equity as at the latest is 34.77 billion divided by 1.66 billion of shares outstanding. We are going to get a figure of 20.91. That means in case this company will go to liquidation, every shareholder will be paid 20.91, which if you compare with the listing price of 18, they are listing Family Bank at an undervalued share. 18 compare with 20.91 or compare with 21. Then we look at the third ratio, which is price to book ratio. How do we get this? We get the market price divided by the book value per share that we have calculated, which is market price is 18 divided by the book value per share, which is 20.91, or the valuation according to the net asset. You'll get a figure of 0.86. What does this one mean in layman language? You are buying, assume you go to the supermarket and buy something. You are buying something worth 1 bob for 86 cents. That means you are buying at a discount, and the discount is 14%. So, in other words, this Family Bank share is being sold to us at a discount of 14%. Let us look at the other ratio, which is called dividend yield. They have declared a dividend of 1.20 according to their audited books for 2025, because they pay 30%, their policy, they pay 30% of their earnings or profits as dividends. So the dividend yield, if you take 1.20 divided by 18, is 6.67%. Moderately good. The ranges hata equity iko hapo 6 to 7%. It's a health dividend yield. The other thing that we are going to look at is at its growth history. If you look at profit after tax, they have surged by 55.4% increase to 5.38 billion as at December 2025. That is not a small increase, that is substantial growth. Secondly, the bank has also strengthened its capital position after a successful capital raise. That's why by then they are not doing an IPO. They are just listing by introduction. And this, it pushed the shareholders' fund to approximately that 4.7 billion. This gives management more resources to expand lending even invest in technology and grow future profit. And this one for growth focused investors, the people who are looking for growth share. This is a major positive. However, the biggest risk that investors in family bank should not ignore is something that we call non-performing loans. If you look at the family bank reports, they are non-performing loans. What do you mean by non-performing loans? These are loans where borrowers like you and me or any business have borrowed from family bank, but they are struggling to pay. So non-performing loans for family bank, they start at 15.23%, which is quite high if you compare with the industry average of 10.8%. This tells us that a large portion of the bank loan book is under stress, and that is not something that investors should ignore. However, there are some good news. The management has improved its loan loss coverage ratio to nearly 79%. What does that mean? While the risk exists, the bank is not ignoring it, and it's doing all its best to absorb any potential losses. In conclusion, is Family Bank a good buy at Kenya shilling 18 bob? If you look at the positive, they outweigh the risk, because if you look at the PE ratio is good, it's trading below its book value, it has strong profit growth, apart from the non-performing loans, and a bit average dividend yield compared to some other banking counters. And now we answer the question, can we buy family bank shares? And this is not financial advice. Do due diligence. For an investor, family bank listing at 18 bob, it offers a highly attractive entry point, effectively allowing you as an investor to buy into a profitable and growing business at 14% discount. Come on, we got the 14% discount of its actual asset value. While the bank may be facing some challenges or some industry hurdles of non-performing loans, the low entry point of 18 bob, it provides a solid safety net for your investment. And if you are looking for an affordable, medium risk banking stock to hold for long-term growth with steady cash payout of dividend, you can remember that dividend of 1.20. This listing represents a fundamentally strong, a reasonably priced opportunity for you as an investor. Thank you.